Silver to me is because it's essential for a high-tech society. It's in a structural deficit. Just the industrial demand alone is taking silver outside of the parameters of what we have mined, which means we got to take the above ground stockpile and eat it away year after year after year in order to maintain a supply and demand equilibrium. And if we got to take all of the above ground silver and use it in industry, what does that mean? It means any investment demand is going to take it beyond that. And when we, the investors, with all the silver in industry society can't function without silver, guess who makes the rules then?
Hello, and welcome to the Infinite Financial Freedom Podcast, where we empower you with financial literacy and guide you on your journey to financial freedom. I'm Josh Mettle. I'm joined today by David Morgan. David is a world-renowned precious metals analyst and monetary system critic. Ooh, I love that. Monetary system critic. With decades of research and insight into the global economic system, David has guided thousands of investors through storms of inflation, market manipulation, and currency devaluation, which I've been talking a lot about on this podcast. So I'm glad to have an actual expert talking about it today with David. David's also the author of the Silver Manifesto and the publisher of the Morgan Report, and he's frequently featured on major financial outlets like Fox Business News, Bloomberg, and Financial Sense. David, welcome to the podcast. It's a pleasure to have you here today.
Josh, it's great to be with you. Thanks for inviting me.
You know, this is an interesting moment in time to have you on the podcast for a lot of reasons. I just got back from, well, first of all, my longtime listeners know I've been talking about inflation and the dangers of inflation for several years now. And I've been helping people understand how they can actually use inflation to their benefit as real estate investors. So we've talked a lot about that on the podcast. I just got back from the All In Summit, and the key headliner, the surprise guest, was none other than Elon Musk. And I just want to play about 30 seconds. I've never done this before on our podcast, but I just want to play you about 30 seconds of how Elon opened his presentation. Really a conversation is what it was. I think this will really frame up the conversation we're going to have today, David, very well. So here we go. Hopefully you can hear the sound right. We'll launch straight in.
That was a good stuff. Any lessons from your time in Washington, D.C.?
The government is basically unfixable.
Elon, only.
I applaud David's noble efforts in this. It's good to have talented people in the administration, but at the end of the day, if you look at our national debt, which is insanely high, the interest payments exceed the Defense Department, War Department budget, and they keep rising. So if AI and robots don't solve our national debt, we're toast.
Which is a great segue.
Oh, the federal government is basically unfixable. I thought that was very interesting. Then he goes into the budget. One last thing I want to show you before we roll, David, just because the timing of this interview is so incredible to me. This was an article that I read early this morning. AI can't run without silver. And the article goes on to talk about the explosive breakout that silver's had recently, and also why it is a real investment play linked to AI. I'm not going to get into this article because you're the expert here, David, but how does that land for you as it relates to Elon's comments around the government being unfixable? Of course, he's talking about the history with Doge and trying to control the budget. And how does that play into your beliefs around silver?
Well, again, Josh, thanks for having me today. And just for the record, I wrote an open letter to Elon Musk, I would guess about 4 years ago. It may be out there on the web somewhere, about long-term thinking with what he was doing in solar and SpaceX and Tesla, and how much his company's dependent on silver. But what I really think is, and believe is that freedom and money are inseparable. When money is honest and sound, society flourishes. And when money is corrupted, freedom is gradually declined or taken away. And that's why life works. It's been dedicated to precious metals and the resource sector because gold and silver are not just commodities, they are the ultimate truth tellers in a financial system. Every fiat currency in history has failed. Governments can print money, but they cannot print trust. I'm with Elon. It's beyond being fixed. There's too many lies and too much corruption. And without trust, economies eventually collapse. We're at a critical point right now. The world is drowning in debt. Central banks are quietly buying record amounts of gold, and silver is beginning to attract institutional investment. Meanwhile, the average person's been led to believe that their future results depend on paper promises, pensions, government bonds, digital bank credits. That's not what's happening. My mission is to change that narrative to help people reclaim independence by owning real assets. Obviously, real estate is a real asset. Commodities are a real asset. Gold and silver are the top of all commodities because of the monetary metals, and they store value and preserve wealth over time. When you hold some gold and silver, you're actually holding some freedom. And it's not just about money. It's about serving people, helping families, entrepreneurs, and communities protect what they've worked so hard for, and positioning them to thrive as we transition into a very different global financial system. So today, I hope not only to share why I believe precious metals are essential, but to inspire your listeners to take practical steps toward lasting financial independence and beyond everything, freedom.
David, a lot of what you are talking about probably seems just outside the grasp of most people, maybe not the listeners of this podcast, but most people. And that's because we've been led to believe that dollars, we'll just talk as Americans for right now, that US dollars is money. And we've been led to believe that the Federal Reserve has control, dominion over the value of those dollars. Of course, they can, control interest rates and those types of things, which clearly we've seen they don't because the Fed cut rates last year only to have mortgage rates and the yield on the longer term debt, like the 10-year treasury, explode higher by a full percent. But we've been led to believe that, even the financial experts on CNBC will often talk about, oh, the Fed's going to drop rates, so we should see improvement in mortgage, they just don't get it. And I think because that's the mainstream media narrative that dollars are money and the Fed has this whole thing orchestrated, it's hard for people to kind of pierce that belief and get over to your side of the fence. So where did you start to understand this deeper understanding of what real money is? Gold, silver, perhaps other commodities you would throw in there. And how did you get from the Main Street narrative to where you are today? Like, help people bridge that gap if you could, please.
Oh, thanks for the question. And thanks for, I wouldn't say pushback, for a great intellectual conversation, because you're right. I just wanted to start the discussion off with who I am and what I'm about. But
Yeah.
I agree, most people are lost because they're basically totally in a belief system that isn't true. So how did I get there? Well, I was 11 years old when the silver standard was left. I used to get 25 cents a week allowance by doing all kinds of things around the 1 acre that we lived on, and get a quarter for that. We're out in the country. I couldn't spend it. I'm kind of a saver by nature. And after saving probably a roll worth of quarters, whatever that is, in weeks, one day I got this new quarter, and it was what I call a Johnson slug. It was a Cupro nickel quarter. It looked sort of silvery, but it was copper on the edge. And I knew something was different. I knew, not only did I know the quarter was different, was as obvious by observation, but I sensed it couldn't be the same value as the silver quarters. And it isn't like at that moment in time, big, the seas opened and none of that happened, but it did hit me. And then as I started getting more and more interested in money and how did it work, I started to study on my own. And then I found out that the Federal Reserve is a private corporation. I always thought it was part of the US government. It's
Of
not.
course.
And they're mostly Europeans. So the Europeans have the Americans' interest at heart? I don't know. Perhaps they do, perhaps they don't. And then I discovered what fractional reserve banking was all about. So when you buy a piece of real estate, you create the loan yourself. The bank's got the collateral, the apartment building, the single family home, the land, or whatever it is. So the collateral's safe with the bank, and they create money out of thin air. And now you have the asset on a mortgaged basis, meaning you don't own it. You owe the bank owns it, and you pay the bank back on something they put down with a signature. So the whole system seemed like it was not really truthful to me. And as I got into it, one of the most important lectures I ever heard in my life, which really was the motivation for me to get into this side of the industry. And that was a hard money conference in Los Angeles when I was still more than a teenager, but not by a lot. A gentleman named Jim Dines, who calls himself the original gold bug, started off his speech and he said these words: all that exists in the universe is truth or resistance to it. That hit me pretty hard. I thought, man, that makes a lot of sense to me. And then he went on to say, in the time I have said those words, you have been lied to because the Fed has printed more dollars and watering the milk never works. And then he went on from there. So I was inspired. I was like, man, so it was like putting all the puzzle pieces together, all that I'd thought of on my own. And here's a guy who's the original gold bug talking about not gold as a commodity, gold is money, but he calls gold the monetary hitching post of the universe, and you can't live a life forever. So that is something that I had, in my early 20s, that people that are retired right now wondering why they had such, a three-digit income and why it's just paying the bills now, when 5 years ago they were able to go to, date night every Friday and Saturday and, do whatever they wanted. They had a very, let's say, comfortable retirement. Now the same cash is not providing that. I could go on and on. Hopefully, I gave you a good answer, not about me specifically, but about the merits of what my study entails, meaning that fiat money always fails, and that's the big problem. And it is obfuscated by the mainstream financial press, by everybody you see on all the financial channels. I am a maverick. I'm one of the few. And the last thing you're going to hear from any of the mainstream is you have to protect your wealth because we're corrupting the dollar. You're not going to hear that.
Great answer. Let me ask you another question about something you said when we opened the podcast. You said, and I'm paraphrasing, that the distortion, you used a different word, but the distortion in money is directly correlated to the distortion in morals. You said it more eloquently than me. Maybe you could restate that and then you could go deeper on what you meant there.
Yeah, well, I think you did a fine job. I mean, there is a direct correlation between the debasement of the currency and the debasement of the moral structure of the society.
Better word.
There's a book called Socioeconomics, two volumes, pretty lengthy read, but Robert Prechter's done a pretty good job on that, as well as others. But we see it over and over. You look back to the Roman Empire.
Yes.
At the beginning, the denarius was almost a pure silver coin, and the Senate actually represented the people, and the people flourished and they were represented. And then you get to the end, and the top tier of the government was for what can I get or steal from everybody else. And the denarius had been debased over and over again by putting it in the melting pot and adding dross material to it. And at the end, it was basically a copper coin with a silver wash, and there was so little silver in it or on it that it basically wore off. So we're seeing a kind of a repeat. This financial crisis that I am concerned about and have been most of my life doesn't mean the end of the world. What it really means is a repricing of assets and really a return to value rather than price. We look at, I have one of my favorite posts that I put on X once in a while is a guy in Zimbabwe holding up a piece of cardboard about 2 feet by 2 feet, and he's got all the currency posted on it, and it says starving billionaire. So it's not necessarily, how many units you have, it's what is their value. And I mean that both in value and value. And what I mean is value of an honest monetary system that's basically an equal playing field for everyone, and values as far as what we are here as the human being. In other words, what is important? Is it another Lamborghini, another yacht, or is it more time with your family, being more sincere, learning what it is to be an authentic person, learning what it is to have balance in your life, not overeat, not undereat, enough sports, but not too much, and not be obsessed about any one thing, but have basically an interaction where you do the highest form of the human experience, which is my personal opinion. But reading your bio, I think you agree with me, and that is the maximum way you can live your life is to be of service to others. And the paradox is I can be of service to others and be of service to myself, because I can show people how I structure a portfolio that's a hedge against everything else that's put out by Wall Street, which I'm not saying to remove yourself from Wall Street. Stock market's done extremely well. Gold has actually done better in the long term. But regardless, do what you need, do what you want, but at least have the, let's say, financial wherewithal to be able to put your assets into balance. And without having the asset that's lasted for thousands of years, you're out of balance.
I completely agree. Let's go back to this idea around the devaluation of currency is linked to the devaluation of morals, because I think it is not well understood, that correlation. And I think it is incredibly important because you alluded to the fall of Rome. And most people, if you ask them, what happened to Rome, they would say, oh, they got invaded. Well, yeah, but before that, there was a devaluation of the money, the denarius. Did I pronounce that right?
Yeah, it's close.
Yeah, the denarius, and where they literally started cutting out the silver and replacing it with copper, I believe. Is that right?
Yeah.
Yeah. And so, today the Federal Reserve does quantitative easing, and poof, here's an extra $2 trillion in circulation. 2,000 years ago, they clipped the edges of the coins and started casting the coins with less silver. It's the same thing, right? It's the devaluation of the currency. So, and the other point that I'll make before I ask you the question that I'm getting to, the fall of Rome and the devaluation of the currency there is not the only dynasty, if you will, the only world leader at that time, right? All roads lead to Rome at that time. There's other major dynasties like Rome that have fallen, and the precursor to them falling was the devaluation of their currency. So it's not like this has only happened once. So the question that I'm getting to is, why is there that correlation? In your eyes, what is it about the devaluation of the currency that leads to the devaluation of morals in a society? And any other instances where you've seen, kingdoms like Rome, world leaders like Rome fall linked to devaluation, I'd invite you to comment on.
Yeah, I'll do the last easy part first. If you look in the Silver Manifesto, my book, we talk about many actually near term and older that have fallen because of the fiat empire, because of the debasement of their specific currency. So I won't name them all. But coming back to the main question, this is my take. I've been studying this for over 4 decades, and it may be written down by someone. That's certainly not an original thought. But I think it goes more not consciously, but subconsciously. I don't think people on the street say, oh, they're debasing the currency, but they intuitively understand that is the corruption, which is they could get something for nothing at the top. I mean, what's the first lesson you teach your kids? You can't get something for nothing. You got to work for it. And the whole system is based on getting something for nothing because the guys at the top press a computer switch and they create trillions of dollars, as you just said a moment ago. They're getting something for nothing, but we have to give our labor for that. What puts them in command? If you and I did that, Josh, we could get away with it. Maybe we'd get an identical looking $100 bill from the AI, but that's called counterfeiting. And we'd be in jail for a long time or prison. but the government has monopoly. And again, it's not even the government. The government gave the monopoly to a private banking corporation, for crying out loud.
Right.
So coming back on point, people start to understand this, maybe not directly, but indirectly. As well, if they get to cheat, what's wrong with me cheating? So if they get to cheat, then it's okay if I, take a few pencils from the office, or I, pull, some scam on at a gas station or whatever. So you get a moral decline. And if I could direct the viewers to my website at themorganreport.com, and if you go to the About tab, you'll see my bio, which you already read. But if you scroll down, there is a direct link to a movie called The Four Horsemen film. I'm in it. It's not about me being in it, but there are some really good thinkers in there talking about the end of the age of empire, which is what you're really asking me. And you see all these things at the end of the age of empire: the debasement of the currency, an overemphasis on sex, an overemphasis on food, where now we have the food channels, where we got the, chef versus chef. And, I don't know them all. I don't watch a lot of TV, Josh, as you would imagine. But all of these ideas, it's a cyclical thing. And as I started to say and forgot to mention, some of my associates and colleagues or whatever that are in the same basic field that I am will tell you, we go through a currency reset about every 40 or 50 years. I won't argue with that. But the reset I'm looking at isn't a currency reset. It's really a societal change. And those only happen every few hundred years. And I think that's what we're actually facing, where we go through basically, as I said earlier, a revaluation. And it may not happen with the bankers in control. Certainly want to maintain control, but doesn't necessarily mean that's what's going to happen. I mean, look at Rome. You look, I'm sure that all the upper class elitists that were running the government at the time felt that they could stay in power, or there were ways to mitigate the problems they were seeing. But nonetheless, it did fall. And I'm not saying America's going to fall. I'm not saying the financial system is going to collapse per se. But as you pointed out before we started, if you look at the Federal Reserve Board's own numbers, the US dollar from 1913, the inception till now, it's worth just about a penny and a half. If their mandate is to have a stable monetary system, they're a 99% failure. I mean, if your kid was in third grade and they got 1 out of 100, I think you'd probably have a chat with them about how miserably they had failed. And this is what we're pretending, is that with the right interest rates and the right governor and the right whatever, we can right the economy. We can grow our way out of it. These are all falsehoods. We are not at that point. We're beyond the point of no return, as you opened with, and thank you for that, with Elon Musk. It cannot be fixed at this point.
Yeah. I'll just add one very quick story onto this, because I think it's really imperative for people to understand this correlation between devaluation of the currency and devaluation of morals. I was doing a surf lesson with my son in Costa Rica, and the young man's name, I believe his name was Eric, and very sharp, articulate young man, probably around the age of 20, surf instructor on the days that he wasn't going to the local university. And I got to talking to him about the local community. We were thinking about buying a home in the Tamarindo area in Costa Rica. And, I asked him about crime, and I asked him about the safety, and I asked him around, the safety of families. And one of the stories that he shared with me was, the people of Costa Rica are great people. They are family people. There's a strong Christian presence there. They love Americans. They're just, kind of salt of the earth neighbor type of culture. Despite that fact, he had told me that many of his friends has resulted to selling drugs. His high school friends, I should preface this with, had begun selling drugs, petty theft, and breaking into the homes of rich Europeaners and Americans that had homes there, not because they were evil people, but because the cost of everything had gone up so much, the cost of rent, the cost of gasoline, the cost of milk and eggs. They literally were at the point where the jobs that they were able to get in the local community could not pay for their family and their children. And when faced with the choice of either feeding their children or breaking into some rich Europeaner's home and taking some stuff so they could put food on the table, they resorted to breaking into those homes. And that's the best story. Like, that story has always stuck with me, that it was the inflation, it was the rising in costs that caused them to devalue their morals. Because at the end of the day, when it comes down to, am I going to put food on the table for my kids to eat or not, you'll do some shit that you probably wouldn't have done if that was your only choice to put food on the table. So that's the illustration that comes to mind and backs up exactly what you said. It's not that they decided to not be good people anymore. It's that they were left with little other choice.
Yeah, well said. I won't add to it. I think that illustrates it perfectly. I guess I could add that, I look at the left, I look at the right, I look in between, I try to gather, an objective reality before I, put pen to paper and write my report or do an interview or what have you. And I just saw one kind of randomly within the last few days. And this girl was, single mom, and she's working 3 jobs and she can't make ends meet. She's not stealing, she's not, and she's just dog tired. Can you imagine, how little sleep, the stress of a young child? You don't have a husband anymore. You're doing everything quote unquote right, and you can't make ends meet, which is exactly what you just said. So what is she going to do? I'm not saying she's going to go out and become a thief. I don't know what she's going to do, but it's a heartbreaker.
Yeah.
Because you go back into when I was, a child, basically it was a one family home working. My dad worked, my mom didn't.
Yeah.
And we lived fine. And my dad made about $4,000 a year, but that was in silver dollars back then. And so, you look at now, you're making, 10 times that's 40,000, 20 times that 80,000, 30 times that is 120,000. And that in most cities is like getting by these days. So what happened? Why is it 30 times? Well, I just told you, if the Fed's job is to keep a stable money and it's failed by 99%, they have failed at their job.
That's right. That's right.
If you're a business owner or an investor, you know the struggle. Tax returns don't always tell the real story, especially when you're self-employed. That's why we created the Entrepreneur Capital Lines of Credit. Use your home equity to launch, expand, invest, or scale your business, all without the old roadblocks of mortgage lending. Call us today and let's unlock that frozen cash sitting behind the sheetrocks of your home to catapult your business to growth.
So I'm going to get to the question, David, why silver? Why silver over gold? Why silver over real estate? Why silver over Bitcoin? Before you answer that question, I want to share your X page, because you're very active on X, at Silver Guru 22, or just search for David Morgan. But on September 9th, you reposted this chart, which I thought was really interesting. This is the trading resistance, if you will, lifelong of silver miners. I don't know if this is inflation adjusted or not, but it looks like, if you know how to read trading charts, a breakout to the upside would be incredibly bullish for silver. So with that setup, why silver?
Well, first of all, there is a bias in there, and that is, Josh, it's for whatever reason, I have always been for the underdog. It's just the way I am made. And we moved from Southern California to Northern California. And when I was a sophomore in high school, my dad bought season's tickets to the Oakland Raiders. And just driving up there the first time, you kind of sense that was not San Francisco. It was It had a much different vibe. You know, these were blue collar people taking stuff off of the dock and driving trucks and bending wrenches and doing all that stuff. And yet there was sort of an underlying feeling that, us against the world, not in a negative way, but we're just as good as anybody. And we kind of had that chip on our shoulder. We had something to prove. So I guess I kind of have that in me. But silver has been the money of the people. If you study monetary history and you go back to like one of the best gold shows on the planet, the New Orleans Gold Conference, and Milton Friedman spoke there. And in his opening speech, he said that silver is the monetary metal of the world, not gold. That's a quote, and I've hardly misquoted it slightly, but it's true. Throughout all of history where we've had stable monetary systems, it's either been a silver standard or a silver and gold standard. And silver has been used in more transactions, more face-to-face dealings over the course of recorded history than gold by far. And the reason being is you buy bread with, silver, you buy, your groceries, your gasoline, the only thing you buy with gold might be a house, but most people can't. So they're going to, pay in silver over time or whatever. So that really is the monetary metal. And the other part is that the bankers know that how these systems unravel. As I said earlier, that they're buying, gold hand over fist. And the old adage, he who owns the gold makes the rules. Well, the banks still own most of the gold and the system changes and they own most of the gold. Guess who makes the rules? But if we, the people, held most of the silver, then the banks didn't. Guess what? In a high technological society, we could see all the gold evaporate tomorrow. I would probably miss my Rolex. I'm joking. I don't have a Rolex. But, all the gold could disappear and the world would continue. But you take away silver for one day and you've gone back into the 1800s. You have no internet, no cell phone, no flat screen TV, no membrane switches. You have no electricity. You really need silver for electrical contacts in some instances. Otherwise, copper will work for a while, but it won't work indefinitely. So we have a system where we actually have a lot of power. And that's when I met Max Kaiser face to face in France many, many, many years ago. And we talked about it and he asked what I did and he didn't quite understand what my, job was. And once we got that squared away and I said, how leveraged the silver market is, he came up with, buy silver, take down JP Morgan. And so we started that meme. And of course, you can't do it very easily because the way the system is set up and the futures markets and all the commodities are basically a derivative market based on paper trading or electronic trading. So I think I digressed a little bit, but silver to me is because it's essential for a high-tech society. It's in a structural deficit. Just the industrial demand alone is taking silver outside of the parameters of what we have mined, which means we got to take the above ground stockpile and eat it away year after year after year in order to maintain a supply and demand equilibrium. And if we got to take all of the above ground silver and use it in industry, what does that mean? It means any investment demand is going to take it beyond that. And when we, the investors, with all the silver in industry society can't function without silver, guess who makes the rules then?
I don't know who you're going to here. I don't know where you're leading me.
Well, we're going to be in a position where people that own silver it may become more and more valuable relative to gold because it's essential and society can't live without it. So as far as what is its usefulness, gold is good for jewelry and money. Silver is good for everything high tech, everything electronic and money. So it has a dual purpose. So if you're going to hire somebody and have a skill set of, marketing, everything that's in Microsoft Office, and they're probably the best interface with an AI you ever met, they'd probably be more valuable than one person that knows Word and Word only. And that's kind of the analogy for gold to silver. Silver does so many things that's essential in a society, and yet it's much the underdog to gold. Did that help?
That's very much. And let's continue down this path. The article that I mentioned as we kicked off our conversation today around you can't have, I think the title was, you can't have an AI boom without a silver boom. Break that down for people. Where is silver used in the growth of the AI boom? And talk a little bit, if you would, around the supply and demand potential imbalances that would cause, more demand, not enough supply, and higher silver prices.
Right. So if you go back 25 years, you will see that silver's industrial use was 35% of the market. Today, it's about
Meaning
60.
that 35% of all the silver mined was used for industrial purposes, the internet, transistors, etc.
Electricity, you got it.
Okay.
Okay, so that is 25 years ago. Today, it's 65% of the market. Is it possible to share a screen?
Yes, you should have permission, please.
All right, so share a screen.
65% today.
There
I had
it
no
is.
idea.
Share. Okay, so you should be seeing my screen now. Can you see it?
I got you. Yep. Just
Okay.
blow
So
that
let
up.
me increase this in size. So this comes from a friend of mine that does metals analysts such as myself. And this is the low demand case. So we're being conservative here, okay? So I'm going to use my cursor. So there's 1.0 over here. That's 1 billion ounces, okay? That's the annual supply of silver from mining and recycling. So you see the red line is at 1 billion ounces, and you see it tapers off to the right slightly, meaning that from the current day, 2025, going out 25 years to 2050, his analysis says we're actually going to be mining less silver and maybe recycling more, but the overall trend is slightly down. Go to the black line there.
Can I just pause you real quick? So that's the supply of silver that's coming to market. Why would that be? Why would he forecast that's going down?
Because the grades of silver are getting less and less. It's like the oil market. All used to drill an oil, one unit of energy would get out 100 units. Now you get 1 unit of energy, you get out 5 units. So you've got all the easy, low hanging fruit. I think everyone understands that. So all the low hanging fruit and the mines and gold. I mean, the mining of gold's at 1 gram an ounce. I digress. Or 1 gram a ton, I mean to say.
1 gram a ton.
Yeah, you used to walk over stuff like that. That's like a pickup truck full of rock is about a ton. And a gram is something that you can't even look at. It's so small. Because you imagine, and it's worth mining it? Anyway, I digress. Let's come back to the chart. So you could see where my cursor is around 2022 and the red line, that total demand is above the red line, which means we had to eat the above ground stockpile that year. And you go to 2024, we had to eat the above ground stockpile again. So if you go out in time, then the supply is coming down slightly and the demand is increasing more and more every year. Where do we get to that theoretical where we ran out of silver point? And it's a pretty interesting thought experiment. And so where does AI fit in here? Well, you can see the green is solar. That's the lion's share of it. You see the blue, that's jewelry demand. You see the dark blue, that's other industrial applications. Ethyl oxide, it's a liquid that's used in a lot of a lot of chemical processes that require it. So anyway, you get a pretty good idea. AI will add on slightly. You see the automotive here in the yellow, that's growing over time because it's growing more and more electric. Photography is practically zero. And then the silver or the gray is net investment. I do think differently than Matt on this. I think as we get more depreciation of the currency, it's not going to be a steady state 200 million ounce investment a year. That's retail. When the institutions come in, they could buy 300 million in a year, which isn't showing on this chart. He missed it. It should that one line should be way up here because the institutions bought 320 million ounces of silver that particular year. What's to prevent them from doing that in the next 3 or 4 years? So what I'm showing you is that what I said earlier, but I think it's easier to see in a chart. This whole area here that I'm circling with the cursor is the amount of silver that's required that cannot be met by mining and recycling. Therefore, it has to come from the above ground stockpile. So if you go from here, whether it's like 1 billion ounce up to like here, which is about 1.7 billion, that's 700 million ounces. That 1 year is equal to about the amount of free float in the silver market today.
So once you utilize that, prices go parabolic would be my conclusion.
Yeah, look, this is investment silver. There'll be, silverware that could be melted down, which isn't very much anymore. Silver jewelry, maybe there's a technological breakthrough. Maybe we get into nanotechnology and there's a replacement for solar panels that doesn't need silver. I mean, I'm objective. But as we understand it today, while we're doing this interview with you, Josh, this is what it looks like. This is the low case. In the higher case, where there's more investment demand, we accelerate the economy. There's more solar usage. There's AI, which isn't in this chart. There's robotics, which isn't in this chart. There's other things that require silver or that cannot function. Those things are in the high case, and this one could accelerate. So where are we at? We're at an inflection point where we'll see silver at some point, maybe this year, above 50. And at that point, we're probably into a territory we've never been in the silver market ever. And that's going to be a very interesting time to behold.
Continue sharing that chart for just a moment as I ask a few questions, if you don't mind. So the important breakout year here to me looks like 2023. All of a sudden, you had a fairly significant from the demand for silver from 1 billion troy ounces to almost 1.2 billion troy ounces, which is a 20% increase in demand in 1 year. It looks like the most of that demand came from the increase in solar. But what else happened that year that led to that 20% breakout in demand from your perspective?
Well, pretty much what you got it. I mean, obviously the green band here was just about doubled that year. So I would say objectively, it was solar demand. And as you can see, it keeps increasing. He shows it tapering off over time, which it may. I don't know. Again, that's the low case. But the other thing that isn't on this chart, I actually altered this chart for one of my lectures. But in 2020, this gray line should be way up there where my cursor is.
The investment.
Yeah, it was 520 million ounces were purchased that year. 200 million, which is their standard amount for retail investors, but 320 came from the institutional side. I believe it was Scott Maynard. Scott was the chief investment officer for Guggenheim Investments, and he was at the WEF, or formerly known as Davos. And in 2020 or 2019, at the end of the year, I forget the exact date, he was asked by Bloomberg, what is your go-to investment for the year? And he said silver. And the guy's just about swallowed the microphone. No one says gold or silver at these events. It's real estate, it's stock markets, the S&P, it's whatever. So after they composed themselves, you could tell it shook him up. He finally said, well, silver, why not gold? And Scott calmly said, because gold is very near its high, but silver is 40% off its high. And that year, 320 million ounces were bought through the ETPs, exchange traded products, which is really the only way he could go, in my estimation. But he's no longer with us. That silver was sold back into the market, and we don't have nearly as strong a holding in the ETFs of silver that we did back in that 1 year. But look, this is conjecture, this is speculation. Is what I could say objectively happened was 320 million ounces were brought in by institutions. Was it Scott Maynard or not? That's my educated guess. I don't know if it was or was not. But the point I'm making is that it could take one individual, it could take 10, but since Saudi Arabia just bought into the SLV and they bought it like 1 million shares, I was asked about that yesterday. And 1 million shares would be a lot for you and I, Josh, but in the context of the money supply that's out there sloshing around, that's an unbelievable small amount compared
Right.
to the amount. The other way I like to look at it is my friend Tavi Costa that runs a fund, basically a resources fund. And he talks about the $6 trillion that's sitting on the sidelines. And if you take waiting for a home, if you take 1% of 6 trillion, that's 60 billion. And that is 2 years silver supply, everything, cycling, recycling, and mined at $30 silver. We're at above 40 right now, but I'll just use 30 because it wasn't that long ago silver was at 30. So if you don't think that 1% of that money that wants to find a home is going to look in the silver market because of fear of depreciation of the currency, maybe the commercial real estate market's getting soft, maybe the financial system is starting to unravel, the stock market starting to come down with the S&P off, the DJI off, and the bond market has no bid. The government has to buy back the bonds because we've just crossed over where banks hold more gold as their prime asset than they do U.S. Treasuries. That hasn't happened in a very long time. So as this takes place, I'm being very conservative to say 1% of that money wants to move into silver, and that would wipe out 2 year supply or a year and a half supply. Something to think about.
So let me ask you this. I've heard a lot. By the way, after the Great Recession, was following Porter Stansberry from Stansberry Research, writing on the End of America, which is really a thesis around the dollar losing reserve currency. And I went into this very kind of, I would call it defensive positioning, buying a lot of silver and gold at that period of time. And uh, one of the things that I have read since I started buying silver and gold in 2010 was that these markets, specifically silver, are manipulated from big banks like JP Morgan. But I've never really fully understood why they're manipulated. Like, why would JP Morgan want to manipulate the price of silver? Could you help me with that? And at a certain point, if there's massive buying in the markets, essentially I assume they've got some sort of a short position on silver. At some point, that's got to be an explosive catalyst higher if they lose the control of the silver market. Could you decode that for me and help me understand that a little better?
Yeah, it's a rather timely question. I was just, I think it was about a week ago, there was a debate going on X about, silver manipulated. And one of my really good friends, he's a hedge fund manager, was willing to debate anybody on that topic. And I felt it was my duty to pretty much take the other side, but I had to get my, the debate format out in front. And I said, look, my premise is and has always been you cannot manipulate the long-term trend. But within that trend, you certainly can manage the price time and time again. And on that basis, I will take on the debate. And so then I put out basically years of what I do, and it's on X, it's on my blog. It's probably easier to find on my blog, the case for manipulation. And I put out like 6 or 7 exhibits, exhibit A, B, C, D, E, go through all the fines, all the jail time, all the slaps on the hands that have happened through the court system, through the legal system to prove quote unquote manipulation, which I never put in a legal document. They use the word spoofing. And I get to the end where I kind of let it rip and I say, look, let's not play word games. Spoofing is manipulation, period. And so that's that part of it. But they cannot manipulate the long-term trend. The long-term trend for gold and silver are up. Why was your question? The answer is not to divert. It's the magician's trick. Don't look over here while I'm doing this over there, because they do not want anyone to lose faith in their system. They don't want an alternative to their system. They don't want anyone to wake up and say, oh my God, we have to have gold. Now, gold has outperformed the S&P 500, the Shiller Index on real estate, and every other main asset class, the bond market, over the past 25 years. But you'll never hear that from Wall Street because they don't sell gold. And most people that buy gold or silver hold it and they don't sell it back. It's kind of their money of last resort. and therefore they have it if they ever need it, want to trade it. Certainly people trade silver on paper every day, but as far as for people that actually what we call stack silver or buy it for the long term, usually put it away and leave it alone. And so that is something that Wall Street doesn't want. They want you to, be in and out of stocks, be in and out of the ETFs or whatever. So that's the main reason. It's not, churning your account, which I just mentioned. It has to do with stability of the financial system. They don't want anyone to know that they're not telling us the truth. Remember what I said? All that exists is truth or resistance to it. The truth is gold preserves your wealth. Doesn't make you wealthy, but if you're buying that apartment or renting that apartment for $1,000 a month in 1960, and today it's $10,000 a month, guess what? It costs you less in gold today than it did back in 1960. What a concept.
That is exactly right. I have a chart on that I believe I have fairly close here that will blow most people's mind. Let me just open this up and I'd love you to comment on this because I know a fraction of what you know on this subject, but every time I've shown this chart, people's mouths just kind of gape open, like they can't believe it. So this is the measurement of the U.S. home prices based on the Case-Shiller average home price represented in green. No, is that right? Let's see. Yeah, that's the U.S. house price here. So you can see that in 1953, the average U.S. home price was 18,000. You follow the green line along here. David, you see my screen okay?
Yeah, perfect.
Okay, and this was 2024, I think. I don't have the date on this, but I believe it was 2024, actually. The median home price in the United States had gone from 18,000, you see over here, about 400,000, roughly. So people would say home prices have exploded and they're really expensive. Well, that's true if you're measuring them in dollars. But remember, dollars are not consistent. A dollar is a terrible measuring device because, a mile is a great measuring device. A foot is a great measuring device. A yard is a great measuring device because in 10 years, 100 years, 1,000 years, a foot is still a foot. A dollar is not a dollar in over 10 or 100 years. The value of a dollar decreases over long periods of time. So most people would say home prices are expensive. But if you change your measuring stick to something that isn't adjustable or depreciatable, like the dollar, and you start measuring home prices in gold, something very interesting happens. This is the price of gold in the blue line. So you'll see gold over here, I don't know, let's just call it $35. Here's on the right-hand side here, $35 an ounce. And if you look at gold prices, this had gold prices at 2,000. You and I know gold prices are 36.80, something like that today. So it's even more exaggerated today or more profound today. But if we just use this data and we say, okay, let's not measure home prices in dollars, let's measure it in gold, we see that gold is up 5,717% since 1953. More now, way more, almost double that, almost 10,000% now with the current gold prices. Home prices are up 2,000%. So if we start measuring home prices in gold, then let's see if home prices are expensive or cheap. Well, if we go back over to this period of time, and you look at home prices based on the price relative to the number of ounces of gold, you'll actually see that the price of homes measured in gold has gone down since 1953. In fact, I think in the next slide, yeah, here we go. So let's see if I remember exactly how. Yeah. So if you look at home prices, this is home prices in oil. Okay, excuse me. But if you look at home prices in gold since 1953, the price of homes is actually down 63% because Gold over that period is up 5,700%. Home prices are up 2,000%. So looking at that chart showing that prices of homes are actually down relative to gold, how would you add your perspective on that? Is there anything else you would add to that chart?
Not really. I think that it's important though, because I know you have a lot of real estate investors and it's a cash flow situation. And you're not going to get cash flow from gold, although there are ways to do it. If you go to my website, by the way, I'm going to have a themorganreport.com/infinite. Is that the first word in your podcast?
Yes.
So /infinite. I will have a landing page built for your viewers, and they can consult with me for 15 minutes for free. I charge $1,000 an hour. So that's a $250 gift to your viewers.
Thank you.
We can talk about anything if they want to find out how to, buy gold or silver for the first time and not make a rookie mistake. If they want to talk, am I exaggerating the problems in the economy, whatever it is. But I'll do that for you.
Thank you.
So bring me back. What was the last question? Oh, did you leave anything? What would I add to on that? I think that you can cash flow gold, but I don't have time to go into that. But one of the ways you can do it is, since we work on the equity side, if you own a major miner, such as a Newmont Mining, you can very easily write covered calls. So you own the property, it's like owning a piece of an apartment building. You own it, so there's no risk, and you own it outright. So there's no mortgage on it. Now what you do is what I call rent your stock. So someone that's really more bullish than you are, and I make these calls, I'm not perfect, but it's a business. You write and say, you can rent my stock for 3 months, but you've got to pay me this price. And for owning it for those 3 months, you got to pay me an additional price called a premium. And I capture that money immediately. Now, if the bettor guesses right and gets my certificate, I've already made money.
Twice. You made money twice.
And
the price
so
went
now
up
what happens? So now it's a little above where I sold it. Well, it's a business. You just restock your inventory. So you buy back your stock and do it again. And if you do that, you make 17% a year based on a gold holding. You own a company that produces gold. So you're gold backed and you're generating, and 17% is conservative. I had one of the guys from the money show I met years ago in Las Vegas when I spoke there. I speak there almost every other year or so. And that's all he does. So I had him on my mastermind and I said, come on in and do my top tier only, big companies. These are people that know what they're doing in the market. There are 6 stocks in there. And that 1 year, it was a 40% return.
David, I'm going to give you the closing thought here. But by the way, I've never heard somebody explain a covered call as renting my stocks. And that was a beautiful explanation. Thank you for that. That's how simple and understandable to a real estate guy like me. I'm going to show one last graph, and then I'd love you to have the closing thought. I wish this was a 2-hour podcast or a 3-hour podcast like Joe Rogan does instead of a 1-hour podcast. This has been really fun. This is the closing thought that I want to share. And for those of you listening to the podcast version, this is a world of debt, share of global debt by country. This was updated in fourth quarter 2024. And the total global government debt was $102 trillion. So, of course, this would include Japan, India, China. But those of you who are seeing the screen, is that the US had 34.5%, greater than a third of all of the global government debt in the entire world, double that of China, more than triple that of Japan, more than 10 times the amount of debt of Italy or India, or even France. It looks like about 10x. So with this in mind, that the United States is the largest debtor by a massive proportion. Now, of course, we also have the largest GDP, but this amount of debt, 36 trillion and counting, of course, higher now. Where does this all end? And when you think about that share of global debt, how do we align ourselves with where the government is headed in all this indebtedness so that we benefit from this trajectory that we're on?
Well, we benefit from it. There's something yet viewers can look up. It's called Triffin's Dilemma. I think it's spelled Triffin, if I spelled it correctly. And it talks about, as a reserve world currency, we actually are required to continue to expand the money supply. We don't have time to go into it. But what I think, the first thing I thought of when you showed that is, first of all, not only is it, over a third of the debt, but what is the United States? 5% of the world's population. What's China? 20% of the world's population. So China has about half the debt we have, and 1 out of every 5 people on the planet is Chinese. 1 out of 5 out of 100 are Americans.
Yes.
So we have proportionally per capita, per person debt, astronomical amount of debt. So the question was, what happens? Well, it gets reset. I mean, there's been a lot of talk about CBDCs or a new system, or we don't want Americans having the reserve currency. The BRICS have been formed, whether they start their own currency or not. I think somewhat irrelevant, because the BRICS are basically circumventing the dollar, and they're trading rubles for yuan, and yuan for reals, and reals for pesos. So in other words, these countries that form the BRICS, and more countries are adding in all the time, they exchange in their own currencies. And so the dollar doesn't have the status it had. You go back, I think it's about 20 years ago, and the all international transaction was something like 75% US dollars. Now it's like 58% US dollars. So the dollar is losing the status of only dollars. Or if I don't have dollars, I don't have, safe savings, which is ridiculous. I mean, all these currencies fail. The dollar is on that trajectory, and the bankers want to be ahead of the game, and they want to wipe out the debt one way or another, start the new system, probably some type of digital currency, a blockchain methodology, where everybody that can't work because AI's replaced their job gets a universal basic income and own nothing and be happy.
This has been extremely insightful, provocative, and fun. Thank you, David Morgan, for being here. This has just been a blast for me. You've given a lot of different places for people to find you on X. We've shown your website. We'll add the landing page in the description. Any place else you want to direct people to find you and follow you, David?
But the last 2 years into a documentary trying to put this thing into perspective, where people understand why they're so stressed out. It's called Silver Sunrise. It's at silversunrise.tv. Talks about the stress, fear, and control the money powers have over our lives, and what we can do as your mission statement to come back, be ourselves, be good to each other. We can't be too kind, and really circumvent some of this, let's say, complex system that we're taught that we have to bow to the money elites, when in reality we do not.
Can't think of a better way to end this one. Thanks for being with us, David, and thanks for all you viewers. This has been incredibly insightful. Thank you, my friend. We'll see you again soon, I hope.
My pleasure. Thank you.